Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right, we are back. This is the Investor Coaching Show. I'm Paul Winkler. He's Evan Varner. We talk money and investing and just whatever the heck is on our minds. It's kind of the way we do stuff here. And happy Memorial Day weekend for you. And shout out to all of those that have kept us free in this wonderful country, the greatest on the planet, in our humble opinion.
We honor the fallen.
Mm-hmm.
We honor the families of the fallen that have lived through that. And specifically, I always remember First Lieutenant Michael Monroe, who was a housemate of mine. And we were in the same infantry company before I transferred. Mm-hmm. And he was one of the few casualties in the first Gulf War. He was a TOW platoon commander.
Oh, wow.
Anti-tank missile unit. And he was one of the few people that was killed in that. I mean,
wow.
In a relatively large campaign, the U.S. didn't really sustain many casualties.
Yeah.
And but he was my roommate.
And you knew him?
Oh, yeah.
Yeah, wow.
We'd served
roommate,
together.
wow.
And,
that's hard.
So,
That's real.
He was single, didn't have kids. His father had passed, and so his mom was kind of, she was devastated because that left her on her own.
Yeah, so, wow.
But freedom isn't free.
No, it is not. So we salute for sure. Having a military family, my dad and my wife's dad as well. So for sure.
Did any of them die in service?
No.
Okay.
Neither one. No,
we didn't either. I've had uncles, grandfather. I mean, we've fought in every war since we became a country.
Yeah,
but I don't think we've lost anybody in any of the wars.
Yeah. I know my dad was in Vietnam, and he, but he flew over.
Yeah,
he was a C-130.
There you go.
Well, he was C-130 later on. He flew over in probably C-97 or something like that. I'm guessing. I don't even know what he flew over that. We never really talked about it a whole lot. But anyway, on to the Investor Coaching Show topics. Go. Let's see.
Let's talk about money.
Let's talk. Let's move right into what we're here for. So we were talking before the break about the SpaceX, the initial public offering. Lots of hype out there. You need to get into the SpaceX thing because the future is space. And that's where we're going. And it kind of reminds me of the future is technology and where we went before. We got all excited about that. Yeah. But the SpaceX stock before there are some articles out there that you can check out if you want to, if you feel so inclined. One right here: buy SpaceX stock before it goes public. Posts are a scam. Now, there are ways to actually get into these things where you get in, but recognize you are buying it off of somebody else. And there are ways that people actually have the stock beforehand. Insiders, but you can have a situation you don't recognize this, but you end up getting into this stock, let's say, and you have to hold it for 6 months. So you end up getting into this illiquid thing and you go, well, what's the big deal? I'm going to get into the biggest thing ever. And 6 months later, then I'll sell it. But recognize that the statistics and on IPOs is not great. It's not really great. Historically, actually, if you look at roughly 40 to 60% of IPOs are below their offering prices within a year. And that's just regular ones, not ones that are hyped up beyond all imagination. The studies going back decades show that most IPOs, most of them, underperformed the broader market over 3 to 5 years. One large historical study on IPOs, a little data here for you. 4 out of 5 IPOs underperformed small cap indexes over time. 4 out of 5. And that's just talking about regular IPOs, not talking about necessarily hyped ones like this. And this thing is being hyped on beyond all imagination.
It is. And, hype I think, is actually a very pertinent term for this situation because Jeff Bezos did a great interview with Andrew Ross Sorkin. I want to say it was Tuesday or Wednesday. Last week. It was an hour-long interview. If you have access to CNBC, it'd be worth checking out.
I saw little bits and pieces, and it was really good. Yeah.
But Andrew had asked him about the SpaceX IPO, and he said, here's the deal. He says, whether or not SpaceX is worth $1.5 trillion, he said, I haven't seen enough of the financials to even, and we don't stock pick anyway in terms of that kind of stuff, but he's like, he's a smart guy. He's like, I haven't seen enough of the financials to see how much of that is revenue driven, how much of that is just pie in the sky. He said it could be worth 2.2 trillion. It could be worth 1 trillion. He said there's just not enough information out there for the market to give it a price.
Well, there was one guy that was actually talking about this, and he said, hey, look at how many satellites, as a payload that this thing could carry up into orbit. And he's doing the calculations on it. And I'm sitting there watching TV going, that's assuming nothing goes wrong. You're assuming nothing goes wrong and that none of that payload ends up being compromised in any way, or none of the flights, and there are no problems with any of the flights. And it's assuming that you don't have any kind of problems as far as, putting those things out there, and that those companies are out there that want to do this on a regular basis. And it assumes that there's enough demand to do as much as you're talking about. There may not be.
Yeah.
And it's also, you look at the prices and you look at the statistics on it. One guy was talking about the level of revenue, and he was comparing NVIDIA to SpaceX, and he was talking about the level of earnings of NVIDIA, and he was talking about the valuation being close to NVIDIA, even though they actually have losses, and making the point that doesn't make a whole lot of sense.
NVIDIA is about $5 trillion now.
Yeah, but there were estimates that it could be pushed up to that high.
Oh, okay.
Yeah, it was actually $4 trillion was the estimate.
Okay, yeah.
Of what it could come out at, and he's going, whoa, that's crazy. But if people don't recognize that, there's like, I was looking at a couple things in this one article I thought were good to point out. It says, need to pause here and point out that hype and urgency are key ingredients in frauds, is what they said in this one piece that was written about it. It says, and this is Morningstar, by the way.
Okay.
Morningstar writing about this. So one thing to always keep in mind is that you cannot buy anything unless someone is willing to sell.
Yep. From
time to time, SpaceX has sold shares to various parties in private transactions. So there are parties, to say, point blank, you can't get into it early. That's a total scam. This is offsetting that to some extent. So it's not total scam necessarily, but recognize that you're buying it off of a private holder of it, and they have to be willing to sell it. And they are not going to give it up for a song and the dance if they think they might be giving up something that has big upside potential. They're not going to sell it to you and go, oh man, I just really like you a whole lot, and I just want to give you this really cheap stock, and I want you to just get really, really rich, and then someday you'll thank me, or no, that's not the way life works. And then he said they said space is a risky business, and that's kind of what I was just saying. At this juncture, it would be difficult to find current shareholders willing to make their shares available at a price significantly below the price at which shares will be offered to the public. Like I said, nobody wants to leave money on the table, no matter how nice you are. It's simply not in their interest to do so, they said. And good point. Excellent job, Morningstar. Even if you could get in now, you might not profit, even if the stock pops, they said, or sells for substantially more than the offer price on opening day. So in other words, they come out with a price, and it just, on opening day, there's just way more demand than we thought there was going to be, and it jumps up like crazy. Even if it happens, you may not necessarily profit. And that's where I got this number right here. It says, as an insider, you would be subject to a lockup period of typically 6 months. So, you could have, and that's happened. I've talked about this before on the show, where you have companies that go public and man, they shoot up like crazy. And then all of a sudden the hype wears down, and then they just dribble down, and they drop down in value. And now when you can finally sell it, all of that extra fluff is out of the stock price, and you end up selling for a loss. I mean, it can be pretty nasty. So the stock could be up, but you join a long list of companies who opening day pop didn't last. I mean, it's happened an awful lot. And they said also an alternative to getting into the pre-IPO shares is once they're public. If your intent is to get in fast and make a quick buck on the first day pop, you aren't investing. You're speculating. You're gambling. Yeah. And so often that's exactly what people do when it comes to investing. They want to get rich quick for whatever reason because maybe they're behind.
I don't know the reason.
Well, they may be behind. Yeah, true. Yeah, it's well.
I want to get rich quick.
The dopamine hit, it's like, I got to get some of that dopamine. Well, Go take a run, will you? There you go. Go eat a hot fudge sundae or something like that.
That's right.
That's right. You can get dopamine. There might be a safer way to do it.
Yeah. Well, talking about the hype of just that IPO, Jason Zweig had an article. Mm-hmm. This is from May 19th. It's pretty recent. Is AI a bubble? Uh-huh. It's starting to get soapy. I love his.
It's getting soapy.
On May 14th, AI Holdings started trading on the NASDAQ.
AIO. It sounds like old McDonald.
And yes, the ticker symbol is AIAI. The company calls itself AI Squared for short.
Oh, my goodness.
How should bubble watchers feel about this? On one hand, AI Squared, which lost $160 million on $272 million in revenue last year, suddenly has a stock market value exceeding $1 billion. Mm-hmm. On the other, AI Squared's stock opened way below its pre-listing reference price of $20. Mm-hmm. This suggests the market might be skeptical about this self-described AI-enabled diversified holding company utilizing transformational AI to enhance portfolio. And where this article is going to be going is kind of hearkening back to your Tronics and .com examples we've had.
Yes.
Because they're now talking about, it's also the latest echo of the kooky craze of adding .com to company names back then, which has been repeating with companies racing to add AI to their names or tickers.
Yeah, it was back in what Evan's referring to is back in the 60s, you could add Tronics to your name. Let's say your company was Blank Incorporated. Well, you call it Blanktronics, and you would have a bump in the stock price just to putting that suffix on the name of the company. Yeah, it's insane.
To me, this quirky case suggests that the market for all things AI related is heating up, but not yet overheated. At their peak, bubbles feature IPOs of outfits, with much wackier marketing pitches than a name change to something like AI Squared. We aren't yet seeing IPOs of companies that produce AI-enabled ketchup bottles or AI-integrated underwear. But if history is any guide, they're coming, probably sooner than later.
Yeah, that's right.
So, kind of that's his whole thing was it hasn't hit the crazy stage yet. But, again, that's not to time the market, not to pick stocks. But it's just human nature is people are trying to get that quick buck, and how can I raise the stock price without actually changing my company?
Well, that's funny. We'd actually had this was a topic of conversation up in the office up here, Evan, this week. We were talking about AI stocks in general, and just the hype over it, how people are excited about it, and I think it was I don't know if it's Michael or it could have been Chad that made this comment. He said you ought to do a study on cannabis stocks.
Yeah.
And, when that all came about, we're going to legalize marijuana. And I thought, oh, what a funny, what an idea. Yeah, we ought to do that. And I dug up a couple articles.
And here I have.
I did. I dug up. Now, this is back in the articles were back in 2020.
Okay.
When this was a topic of conversation right here on the Investor Coaching Show. Yeah. And we were joking around, remember that, hey, these stocks are going to go high, right?
That's right.
We were talking about cannabis stocks, right? And articles entitled, "It's time to get serious about U.S. marijuana stocks." Is it time to buy cannabis stocks? It was another article that was from Yahoo, and the first one was from investors.com. And what I did is I actually pulled up and I thought, well, what better way to actually look at what happened than just to go into our database and pull up all exchange traded funds with the name cannabis in them.
Oh, okay.
Yeah, just to make it so, I'm not cherry picking. I'm just pulling everything up that has that name in it.
Leaf picking.
So if we look at cherry picking or marijuana picking, right? Okay, whatever. That's not funny.
Bud picking.
Yeah, it is. Okay, so what was the return after these? If you look at the 5-year return, I just looked at, because you have 1, 3, and 5 year in Morningstar.
Yeah.
What was the 5-year return, the average return of these particular ETFs, exchange traded funds with the name cannabis in them over the past 5 years? You want to take a stab at what the return was? I know it's putting it in the spot.
Average annual or
yeah,
over
average
the
annual.
5 years?
Yeah, average annual.
-15.
All right. At least you took a risk. Try -32.
Was it really?
Negative 32.38%. Average annual negative return.
Zero almost.
Yeah, and it was all the
Wow.
hype. People were all excited about it back then, but did it go high? Like our joke said, no, not necessarily. It didn't work out so well.
But the good news is those investors probably didn't care.
Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.